Hi, I'm Dave Dinkle, and today we're going to talk about what is the most powerful real estate investing tool. And it's very simply self-directed IRAs. We're going to talk about how and why to use this powerful tool to accumulate tax-deferred and tax-free retirement income.
Advanta IRA is one of the premier self-directed IRA companies in the country. Go ahead, Kevin, take it over.
Well, thank you, Dave. Just wanted to talk a little bit today about self-directed IRAs, review the types of IRAs and the types of investments and investment structures that can be made using a self-directed IRA. A little bit about our company. Advanta IRA has been a self-directed IRA administrator since 2002. We are also a qualified intermediary for 1031 exchanges. We have 3 offices throughout Florida, our home office being in Fort Myers. I run the South Florida office, and we also have an office in Gainesville, Florida, serving the north part of the state and the Panhandle. So just a little disclaimer here. Advanta IRA does not give any investment advice. We do not endorse any products that are in our accounts. All information material that I will be presenting, I would suggest to consult your attorney or financial advisor before making any investments, and Advanta reserves the right to reject any investment that we seem fit. We have 3 simple goals here at Advanta IRA. The first goal is to educate you about the different types of IRAs that can be self-directed, help you learn about the diverse investment options available to you in self-directed IRAs, and third, highlight the benefits of tax-free and tax-deferred investing. 3 things we're going to touch on is learn how to benefit and go into the detail about the benefits of Roth IRAs, learn about the different alternative assets that are available to be in self-directed IRAs, and also go through a couple case scenarios about lending as well as real estate purchase. So let's start out. What is an IRA? An IRA is an individual retirement account that was set up in 1974 for tax code section 408, which provides a vehicle for individuals to save for retirement on a tax-deferred or tax-free basis. All the investments that are made inside the account grow tax-free, and you are eligible to take distributions from those accounts when you reach the age of 59 and a half without penalty. If you do take those distributions before 59 and a half, there are 10% penalties and associated taxes with those early distributions. With certain types of IRAs, you can make tax-deductible contributions. For traditional and other types of IRAs, you get a back-end tax benefit. So why invest in an IRA account? Well, the number one reason for investing in an IRA account would be that the contributions for a traditional would be tax deductible. The second and equally beneficial reason would be that the gains and income produced inside the account is tax deferred, meaning that you will always have more money to invest in your next subsequent investment because you're not paying any taxes on the gains from the previous investment. So over time, exponentially, your gains will be greater, and we'll illustrate that with a graph coming up. If you do invest in a Roth IRA, depending on how it's structured, your gains may never be taxed. Most importantly, all these vehicles are there to build for your retirement. This is an illustration of the benefits of tax-deferred investing. We took annualized rate of return of 15% with a tax rate of 19%, which is pretty common for most Americans. The left side here is starting with $10,000 in year 1, earning a 15% gain over 30 years, and how much money you would have over that period if you just started with $10,000 and didn't invest any more money and were able to attain 15% a year in interest. So you would turn your $10,000 over 30 years into $662,000 by using an IRA vehicle to make those investments. Conversely, on the right side, this is what your investment and future nest egg would look like if you did it outside of an IRA in your personal name or in an LLC, and you had to pay that 19% a year tax rate for all your gains. So as you can see, in year 1, if you started with that same $10,000 and was subject to a 19% tax rate on an annual basis, you would only end up with about half as much money, about $300,000, and you would have paid a total of over $70,000 in taxes over that 30-year period on those gains. So you could see the benefit of investing with an IRA and tax-deferred vehicle, that over a 30-year period you would have almost double or over double the money that you would have doing it normally. The most important difference between a traditional and a Roth is that with a traditional IRA, that you take a front-end tax benefit. And what I mean by that is, when you make your contribution to a traditional IRA, you get a tax deduction in the year you make that contribution. So you're getting a front-end tax benefit. However, when you go to take the money out of that traditional IRA when you're over 59 years old, you have to pay taxes on that money as you take it out in each year. If you have $1 million traditional IRA and you take out $100,000 to live off of in your first year of retirement, you're paying taxes on $100,000 of income. As opposed to with a Roth IRA, you're foregoing the front-end tax benefit and taking a back-end tax benefit. Meaning you're not going to take that, when you make that contribution to the Roth IRA, you're not going to get the tax deduction. However, when you do go to retire and you're over 59 and you're taking the money out, you do not owe any taxes on that money. This has a greater back-end tax benefit. One thing to sum this up with a little metaphor is with a Roth IRA, you're taxing the seed and not the crop. Both with a Roth and a traditional have the same contribution limits, $5,500 if you're under 50 years old and $6,500 if you're over 50. Another important point to highlight here is that with a traditional IRA, the government is going to require you to take money out at 70 and a half through the form of required minimum distributions, which they use a table to calculate your minimum distribution each year. With a Roth IRA, you're never required to take required minimum distributions. Estate planning tool, if you're looking to pass wealth tax-free, the Roth IRA is the best option because you can pass the entire account without being required to take any money out to your beneficiaries tax-free. There are other types of IRAs that we administer here at Advana, and just want to be clear that all types of IRAs can be self-directed. We'll start with a simplified employee pension, or what's known as a SEP IRA. This is good for self-employed individuals because it allows for the individual to contribute up to 25% of their self-employed earnings or $50,000, whichever is less. So being self-employed with a SEP IRA, it allows for greater contributions to $50,000 per year as opposed to a regular traditional IRA, which only allows up to $6,500. The second type of tax advantage plan would be what's called a savings incentive match for employees of small employers, or what we call a simple IRA. This is similar to what you're used to on a traditional 401k. It has a employee contribution level that you can put in. The employee can contribute some of their own earnings, just over $12,000 a year for 2013, but it also includes an employer match of either 1, 2, or 3%, depending on what's chosen when account is set up. So this is good for employers with under 100 employees that want to provide some type of plan for their company and their employees. There's also a spousal IRA. What the IRS says is that you have to have earned income to contribute to an IRA, but they give you a little benefit if you are married. So say you have a non-working spouse, a wife that's taking care of the children, and the husband is the only one working, so he's the only one with the true earned income. Well, if you're married, the husband is able to contribute the amount of contributions for his wife just like he's able to contribute for himself. You could have a non-working spouse that has a Roth IRA. The husband contributes $6,500 for the spouse, just like he can contribute $6,500 for himself. We also have a Cordova, or what's known as an educational IRA. This is a special savings plan to save for future education expenses for children. Those types can also be self-directed. And we also administer health savings accounts, which are accounts that are set up to provide tax advantage payment of medical expenses. The good thing about a health savings account is you take a front-end tax benefit on the contribution, and as long as you use that money for qualified medical expenses, you do not have to pay taxes on the money when you use it for those expenses. If you do not use that money for qualified medical expenses, you are subject to taxes and penalties if you're under 59 and a half and you take it out. And the last type of plan, we also administer what's called a self-directed 401k plan. 401k plan does have the highest contribution limits for an individual. They compose of both employee and employer contributions, getting up to over $53,000 a year, depending on the person's age. What is a self-directed IRA? A self-directed IRA is a type of IRA that allows for the most freedom and flexibility and allows you to invest in the types of assets you know. For a realtor, maybe the realtor knows real estate, so they want to invest their retirement in the real estate market. Maybe a hedge fund manager knows investing in the markets. He wants to maybe put his money into his hedge fund. We have unlimited choices here at Advana. All types of alternative investments can be self-directed. Why haven't you heard about this? You haven't heard about this because 99% of the custodians out there, the big wire wirehouses, the Schwabs, the Fidelities of the world, they administer IRAs, but they only allow you to invest in the assets they sell, such as stocks, bonds, mutual funds, and ETFs. Also, these companies are large multi-million-dollar conglomerates which have huge marketing budgets. So they're able to go on TV, put out commercials telling you about IRAs, investing in the market. You know, our self-directed administrators don't have those marketing budgets, so the only way that we can make people aware of these options is to do presentations like this. So what types of investment choices do our clients buy in a self-directed IRA? All types of real estate. You can do unsecured and secured notes. Clients can lend through their IRA. Futures in Forex trading accounts. Gold and other precious metals such as silver, platinum, and palladium. Private stocks such as private placement securities or joint venture partnerships. LLCs, limited partnerships, and joint ventures. All these types of investments can be self-directed and be invested through a self-directed IRA and enjoy those tax benefits. Also, we have checkbook IRAs, which is a vehicle that allows for freedom and flexibility in making those investments, which we'll go over later. There are some rules and regulations that the IRS puts in place for IRAs and self-directed IRAs in general. There are certain assets that are prohibited. The IRS doesn't dictate what you can invest in. They only say what you cannot invest in. And what the IRS says that you cannot invest in is life insurance and collectibles. And collectibles are defined as anything with an intrinsic value, such as what's listed here. Works of art, rugs, metals and gems, stamps and coins, wine, alcoholic beverages. So it's important to know that, in summary, that you can only invest in assets that are not collectibles and life insurance. There are also certain parties to your IRA that the IRS says that you cannot do business with or transact with. Some examples of those disqualified parties are you and your spouse, any lineal ascendants. So what I mean by lineal ascendants are people on your vertical family tree. So that would be your parents, grandparents, children, or grandchildren. It is okay that you can transact business with anyone on your horizontal family tree. That would be brothers, sisters, aunts, uncles, nieces, nephews, and cousins. Those are people that your IRA can do business with. There's a little joke in the industry that the person that made up these rules at the IRS was an only child. Another disqualified party would be any fiduciary to the IRA, which would be someone like your administrator, like Advana. You wouldn't be able to transact business with employees of Advana. Anyone providing services to your IRA, and most importantly, any company or partnership in which you own directly or indirectly across you and your disqualified parties over 50% of the entity. So if you had a company with 3 people and you and your wife and a third person each own 33%, you and your wife's IRAs would not be able to transact business, lend money, invest in that company because your combined interest for the two of you would be 66%. That'd be over 50. However, you take that same example, you and your wife, say, each owned 15% of the company, and the third partner owned 70%. Your combined interest would only be 30, so then your IRAs would be able to transact business with that. And continuing on with the prohibited transactions with the self-directed IRA, as I mentioned before, the IRS cannot engage in any transaction with anybody or anything considered related to the IRA, and that goes back to those prohibited parties that we discussed earlier. And some examples of prohibited transactions between disqualified persons and IRAs are selling, exchanging, and leasing property. So you cannot do any of these 3 things with any of those disqualified parties. So you would not be able to buy any property. So say you own a piece of real estate personally outside of your IRA would not be able to buy that piece of property from you and put it into the IRA. There's too much room there for collusion. The second is you cannot lend money or extend credit to any disqualified person or entity. Again, too much room for collusion. And you're not allowed to furnish goods or services or facilities. A good example of that is if your IRA owns a piece of property and you are a management company, you would not be able to contract your management company for a fee to do any services for that property that's owned by your IRA. You would need an independent third-party management company to do those services. The most thing to remember is that your IRA is set up to benefit you when you retire and not before. So any type of transaction that would provide a monetary benefit to you prior to retirement is a prohibited transaction. 2 key points with dealing with IRAs in real estate is no self-dealing and definitely no personal use. All real estate in a self-directed IRA must be for investment purposes only. You can, however, partner with yourself or other parties at the beginning of any transaction. As long as you enter in a transaction as a tenants in common or a partnership, you can partner with your self-directed IRA and enter into that transaction. Basically, the IRA does not have to own an asset 100%. If you do enter into a partnership agreement for an asset, the IRA definitely has to pay its share of expenses and it receives its share of income associated with that asset. So for example, if you buy a property for $100,000 and you put up $40,000 of personal funds and your IRA invests $60,000, that's a 40-60 partnership between you and your IRA. 40% of the expenses must be paid by you personally, and 60% of the expenses must be paid by the IRA. And conversely, the income must be divided against those same percentages. An example of how a deed would be vested in this situation, you would have to title the IRA portion of the asset, for example, would be titled Advanta IRA Trust LLC for the benefit of the client, which would be your name, and then IRA, with a 50-50 example as to an undivided 50% interest, and then John Smith as to an undivided 50% interest. Here are some typical questions that will come up in regards to prohibited transactions. So I'm going to go through a few examples with you, just so you see the gist of what we're talking about. The first question is, if the IRA purchases an apartment building in Gainesville, Florida, and the IRA account holder rents at a fair market value to multiple parties, including a son attending college at University of Florida, would this be a prohibited transaction? Yes, this would be a prohibited transaction because the IRA owns the property and it's renting to the account holder's son. The son is on the vertical family tree, so therefore he is a prohibited party to the IRA, and therefore engaging in this type of transaction would be prohibited. There are certain risks to a prohibited transaction. If you are caught entering into a prohibited transaction and audited by the IRS, the entire IRA that is involved in that transaction becomes distributed. That also requires you to pay a 10% penalty and all the taxes associated with that distribution. So it's pretty stiff penalties for engaging in those prohibited transactions. The second question, if the IRA lends on a first mortgage note to an LLC in which the IRA account holder owns 67% of the entity that is borrowing the money, is that allowed? No, that's not allowed. That's not allowed because the IRA account holder owns over 50% of the entity that is looking to get the loan. That percentage would need to be less than 50% for this to be a valid transaction. Third question, if the IRA purchases a condo from the IRA account holder's brother, is this allowed? Yes, this transaction is allowed because the brother is on a horizontal family tree. Remember what we said, that horizontal family tree transactions are allowed, vertical family tree transactions are not. Another one, Jerry buys a house in need of rehab in Fort Myers, Florida. 6 months later, her fiance Dale wants to invest in the project by purchasing half of the equity with the $100,000 he has in his IRA. Is this transaction allowed? Yes, this transaction is allowed. And the reason this transaction is allowed is for the fact that these two are not married yet, saying that they're fiancé, so they haven't engaged in, they're not married, so they're not spouses. This would be an allowed transaction at this time. And finally, if your IRA and your father purchase a condo as 50-50 tenants in common, is this allowed? Yes, this transaction is allowed because remember we said that your IRA can partner with anybody at the beginning of a transaction. Because they're partnering tenants in common, they're entering into a new transaction together as partners, you can do this transaction. If the father already owned the property, then the son couldn't come in and buy his share. But because it's a new transaction, fresh from the start, you can come in as a partner. So now we are going to get into more specifically the types of assets that are allowed in the self-directed IRA and what you can do with them. So the first one is real estate. Real estate is the most popular asset that we see in self-directed IRAs here at Advanta. That real estate can be any type, including single family and multi-unit homes. With those homes, you can do fix and flips, where you purchase the property, rehab it, and then sell it. The benefit of doing that type of transaction is that you avoid any capital gains, short-term capital gains that would be associated with that transaction by doing it in the IRA. The other type of real estate transaction that we see on single and multifamily homes are buy and hold or buy and rent types of transactions. So those are good types of transactions, self-directed IRA, because they provide for income to the account. And that income is also tax deferred or tax free. Apartment buildings allowed, condominiums are allowed, any types of commercial property, and also improved or unimproved land. So basically any type of real estate can be put into a self-directed IRA. We even allow foreign property inside an IRA. So if you have some property in a foreign country that you thought would be a great investment, you too could put those inside of a self-directed IRA. We also allow land trusts. With land trusts, the way that that would work would be that the IRA would actually be assigned as the beneficiary of the land trust. It's important to note that with real estate, that when the IRA takes title to the property, that it's titled on the deed properly. An example of that vesting would be Advanta IRA Trust LLC for the benefit of John Q. Client, IRA, and then their account number. I know with real estate, because it's in the public record, some clients would want some anonymity there. In that case, we would be able to title the account Advanta IRA Trust LLC for the benefit of IRA number 123456, removing the client's name from the vesting, but still having the account number, which can only be referenced through Advanta. It's also important to note with real estate that all income and expenses must flow through the IRA account. So that means any expenses associated with the asset, homeowner association, insurance, maintenance, all those expenses need to be paid from the IRA, just as any income or gains coming from the property, sale of the property or renting of the property would come back to the IRA. Also, no personal use or self-dealing. So if you own an investment property in a nice vacation area, you're not allowed to go and stay in that property for a weekend. That's a prohibited transaction. There's no self-dealing. There's no personal use of that property. You do get caught, there are those strict penalties for engaging in that prohibited type of transaction. So let's just do a short example of buying some real estate in the account. Dr. Jones transfers $35,000 from an existing IRA to a self-directed IRA at Advanta. He directs Advanta to execute a purchase contract for a piece of vacant land in Northport, Florida. So the IRA would purchase the land for $30,000 in May of 2008. Purchasing the land for $30,000, leaving $5,000 in the account to cover any expenses that may be associated with that piece of land. After 4 years, the asset has grown to $48,000 in value, and Dr. Jones was able to sell the property out of the IRA for $48,000. So in this case, Dr. Jones gets his $30,000 plus the gain of $18,000 back to his IRA. And that $18,000 capital gain is tax-free inside the account. The other type of transactions we say in regards to real estate is private lending transactions or secured or unsecured promissory notes. An IRA is allowed to lend money on a mortgage or a promissory note, just like any bank would be able to do. Generally, these types of notes command higher interest rates because they're private financing. You can generally get between 8 and 15%, but it is important to note that on these lending transactions that you abide by your state's usury laws. So each state has usury laws that set maximum interest rates for loans. I would definitely abide by those usury laws. I know the state of Florida's usury law is 18%. Because you're doing the lending, you're the bank, you can negotiate and ultimately decide the terms of the note. Most importantly, the IRA, as an owner of a secured mortgage note, has the ability to foreclose on the property in the event of a default. So if you did lend some money out to a borrower and the borrower stopped paying you, your IRA can move forward with foreclosure proceedings. Once those proceedings were finalized and you were able to foreclose on the property, then that property would come into the account as owned by the IRA. And your cost of the property is simply what you lent out to the borrower that defaulted. If you keep your loan to values at a reasonable conservative level, protecting yourself in the event of a default by being able to foreclose on the property and then turning around, and if you sell that property at market value and earn a 40 or 50% gain, again, that is tax-free to the account. Let's do a short case study on lending. Bill Smith decides to invest in a note with his IRA, and he's going to hold a note and a first mortgage from an individual purchasing a rental property. He's going to do the loan at $100,000, interest only on a 5-year balloon. So the note is secured by the mortgage on the property, and they agreed to an interest rate of 12%. During this life of this loan, monthly interest-only payments of $1,000 come back to the IRA for this note. Those payments come back tax-free, and the benefit of this transaction is tax-free income to the IRA. In this case, at the end of the 5 years, when the loan matures, the $100,000 would also be paid back to the account, and then 5 years worth of interest payments as well. The other type of investments that we see in self-directed IRA are investments in private companies. Other investors also use these structures to put real estate into. So the types of private companies that we see are either through like a subscription agreement, an LLC, or a limited partnership on maybe like a hedge fund or type of fund structure where all investments are brought on through subscription agreement. So hedge funds, real estate funds, and private stocks or private placement memorandums, so more like private placements. The second type of private company that we see in a self-directed IRA is when the IRA is actually a partner or a member directly on the operating agreement for the company. So with the IRA as a member on the operating agreement, we would have the vesting of the account directly in the operating agreement as the member. So it would be something like Advanta IRA Trust for the benefit of John Q. Client, listed as one of the members on the operating agreement of the LLC. So therefore, any income or distributions from that company would come back to the IRA account at the percentage of ownership that the IRA is the member. The final type of structure that we see for investments is what's called a single member LLC, or commonly known as a checkbook control IRA. Now this type of structure allows the most freedom and flexibility for investing in assets using a self-directed IRA. Now the reason that is because all the investments in this structure are made in the name of the LLC that is set up. It would work with the IRA being the sole 100% member of the LLC, and it would have the IRA holder as the manager. As the manager being that you have the ability to enter the entity into contracts, into deals, and to sign checks and contracts. To set up this type of structure, you would have to set up a new IRA compliant LLC with the state. You would need an attorney to prepare an IRA compliant operating agreement. And what I mean by IRA compliant is that you identify what types of business the LLC can and can't do. More importantly, identifying prohibited transactions in the operating agreement as types of transactions that the LLC cannot get engaged in. You would establish a bank account in the name of the LLC at any business bank of your choice, and then we would fund the LLC by sending your IRA funds at Advanta to the business banking account that you set up. Therefore, once those funds are in the business bank account in the name of the LLC, through that account you have checkbook control over those funds. So let me give you a illustration just to give you an illustrated example of what I'm talking about. Your Advanta IRA account sits at the top of this flow chart. You open up your Advanta IRA account and fund it. And then within your Advanta IRA account, you hold one asset, which is the 100% member interest in this single member LLC. The single member LLC opens up a bank account at the bank of your choice, and then the money flows between Advanta and that bank account. So once you have the funds available for investment, then you would make investments in investments A, B, and C in the name of the single member LLC going forward. Now, what's most important to note is that by doing this structure is you're taking Advanta, the custodian, out of the transaction. With that freedom comes a lot of responsibility. And the responsibility is that you have to be very familiar with the rules and prohibited transactions, prohibited parties, to be sure that you do not enter your LLC into any business arrangements that could be considered prohibited or disqualified to the account. You will not have Advanta reviewing the transactions like we would do with a normal transaction where the IRA purchased the asset directly. Taking Advanta out of the equation, and that's what's given you that freedom and flexibility. This structure is great for people that buy properties from an auction, because with an auction you need to have the deposit check immediately and then all remaining funds generally within 24 hours. So with this checkbook control, you have the ability to write those checks and fund those investments immediately through the bank account. Also, anyone that buys tax deeds to the tax deed auction, similar type of auction structure, you might want to have this type of structure in place to make for easy payment of deposits and subsequent funds. Also, with this structure, because you have an LLC that you've created, you choose the name, you could register on these online auction websites in the name of the LLC with the tax ID number for that LLC. All your auction business online. If you had an account straight with Advanta where you'd want Advanta to purchase the asset directly in the account, we wouldn't be able to register Advanta on those sites because our tax ID number is for all of our 4,000 clients. Most of the time we would see a duplicate in that situation. So if you are definitely an auction buyer, a single member LLC is the best structure for you. How to get started with a self-directed IRA? The first step would be to fill out the application documents. Second step would be select how to fund it. You can fund the investment 3 ways. It could be from a transfer from an existing IRA. You can roll over an old 401k or other type of employee plan to the account, or you can simply write a check and make your annual contribution. So quick review of what you get at Advana IRA. We do all the IRS reporting associated with the account, receive all income from your assets, and process all payments for expenses. We request all required forms for the transactions, and we accept your contributions and process your distribution. What we do not do here at Advana is we do not provide any investment advice. We do not sell or endorse any investments or products in our accounts, and we are not regulators, nor do we approve transactions. Advana IRA is a resource. We have loads of information on our website in regards to self-directed IRA plans. We do weekly seminars. We do special continuing education sessions for certain professionals, and you can sign up for our free monthly newsletter. Feel free to visit our website at www.advanatrust.com, or feel free to give us a call. So in closing, I just want to say thank you very much for your time, and feel free to go on our website or give me a call directly with any questions or anything that I could do to help you out. Phone number is right here, as well as our website address.